Joining us right now is Jeremy Siegel. He's chief economist at Wisdom Tree and professor emeritus of finance at University of Pennsylvania's Wharton School of Business. And Jeremy, we're down on this first trading day of September, probably because of questions about the tariffs. But I don't know, we're also at relatively high levels. How are you feeling about things right now?
Yeah, and probably because of September,
right?
being historically really the worst month of the year. Listen, certainly we could have a pullback. I mean, I still think the bull trends are intact. I know you guys mentioned the Wall Street Journal article this morning about all-time high, so I took it out and read it, and it said, oh, yeah, it's all-time highs relative to sales. Well, I thought we, value stocks on earnings, not sales. And
right.
We're way, below any all-time high in terms of earnings. Not that it's not an expensive market, but once you take out, and even that article admitted, once you take out the Mag 7, we're only, slightly above a longer-term median. So I still think this bull run has a place to go. Revisions are still upward. I mean, there's a lot of things that can derail it. I mean, the tariff development is very interesting because I think it's going to go to the Supreme Court. And I think the Supreme Court's going to throw it back to Congress and say, have the Republican Congress say okay, and then it'll go through, and that's going to be very interesting politics, I think, in the second half of this year.
It's just the Senate that would have to sign off on it, right?
Interesting sort of development.
Yeah, I mean, he has control. The party has control of the Senate, of the Congress. We'll see if they would choose to fight him on that or whether they'd say, OK, we go along with what we've seen to this point. But I want to go back to what you just said, this idea that we're at the highest level if you divide by sales. I mean, we mock people when they look at sales. We say that's not the real number. You're right. If we're looking at earnings, that seems like the much more important number to bear out.
And the biggest companies you're talking about, the Mag 7, are the richest in terms of price to sales, probably, too, because of all the potential.
And it's because the margins of those companies are so high. Margins of digital tech companies have always been the highest. So if they're predominant, you're going to get a result such as this. And I think that's built into tech. Tech has very, very high margins because of the way accounting goes and the way globalization and how you can replicate at virtually no cost. All you need is those customers to come. So it's a very different sort of a thing than looking back at a steel company or an auto company. And to put them all together, I think gives a misleading look at the market.
So you're feeling pretty good about things, even though you look at the calendar and see it's September.
Yeah, and again, I wouldn't be surprised. And short-run forecasting is hard, but the upward revision of earnings, after it took the hit in April, and we still have to see. I mean, there's a big dispersion. I think one of the biggest dispersions I've seen in GDP for this quarter. I mean, it's true that the Atlanta Fed is looking like 3.5, which sort of shocked me. I think Goldman's still looking at 1.5. J.P. Morgan is sort of in the middle at 2.5, and I've never seen such a dispersion. We're more than 2/3 of the way through the quarter, outside of recession periods, which of course are very different. So I think there's still a lot of questions. Not all those price increases are yet recorded. What is going to happen the second half of the year? I think that's really the biggest question. And that, of course, is still linked with the tariff question of the legality and how it's going to flow through to the consumer.
So obviously a lot of questions, but you're still feeling pretty good. And I think we'll take it at that, Professor.
I'm still positive on the market. At this time, of course, any sort of developments could come that could change that. But what I see is still constructive, very constructive.